Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name is Peter Renton, chairman and co-founder of Fintech Nexus, joined as always, but no, actually he wasn't here last week because he just had a baby, and he is taking time out from his 8-day-old boy to join us here on the news show. How are you doing, Todd?
I'm good, Peter. Number 2 for us,
Yeah.
healthy baby boy, Cole Edward, 8 pounds, 13 ounces. And everybody, mom and baby, are doing great.
Excellent news. And our special guest today, back again, Tim Lee. How are you doing, Tim?
Doing fantastic. Congratulations, Todd.
Thank
Peter,
you.
always good to be here.
All right. Well, before we start, we just want to acknowledge the Queen's passing today. It was obviously a very, very big news story that's dominating the thoughts of those of us in fintech, particularly in the UK. So wanted to acknowledge that. But we do have a busy news show to get to, and we are going to start talking about bank fintech partnerships. I mean, this is something we started talking about in like 2014 or even earlier. But it seems like the current OCC is getting very interested in these types of partnerships. So we're going to have two articles here that we're going to talk about. The first, they're both from American Banker actually, but it was covered extensively in the fintech press. But the first one talking about how like the OCC took action last week against Blue Ridge Bank. They're one of the smaller banks when it comes to bank fintech partnerships, but they had a couple of aggressive clients, shall we say. But that was the first hint that that there was something going on here. And the OCC has said that many of these banks that are in the bank fintech partnership game are small banks, so they're going to be paying attention to these. So, any thoughts on that, guys?
I think the initial thought was, and reading the articles, some of the stuff that he talked about, I think is sensible, especially when it comes to like cyber risk and those things, because obviously if a fintech that's building fast is partnering with some of the banks, and these banks are obviously more regulated entities, they're chartered depending if it's state or federal or whatever, you don't want to bring in companies and technology that's not tested and proven and potentially opens up risk in ways like that. So I think in those terms, I'm all for making sure there's certain bars to hit. But then he kind of felt like he jumped from there to like the extreme other side, saying that this could cause another financial crisis. And I think he's playing a little bit to either the press or certain regulators or even legislators on some of his comments, because I think it's quite a leap from where he started to where he ended up. And I think the market should play out some of this stuff. If there's bad products, people won't buy them, or they'll be too high priced, and the lower priced products will win. But I think he's being a bit aggressive. Maybe he's posturing in some ways. I don't know.
Yeah. I mean, 10 years ago, we had, the cross-servers, the web banks of the world, the 2-3 big ones out there that are doing these partnerships. Now there's a long tail of banks are trying to copy the model, right? Maybe have got enamored with how they're going to make money with fintech partnerships. I think I know firsthand that some of these onboarding process has been loosened up a little bit. So there's definitely a lot to be said about what OCC is doing, but hitting at the bottom of these articles, therein lies OCC in this Blue Ridge case specifically. OCC said no more fintech partnerships unless you get a no action letter from us, which I thought it was super zealous.
Yeah,
like you can't onboard any more partnerships until you get an okay from us. I mean, that's
basically saying
that's essentially it's over.
Yeah, you can, and I think that's the thing. And I mean, the second article that really talks about this, like systemic risk, and I mean, sure, you've got like there's companies like Chime that have now I think tens of millions, certainly more than 10 million clients in the US. That all Chime is not a bank; it's all with a partner bank. But you look at the like you was comparing it back to the financial crisis, and I just feel like there isn't much in common with the financial crisis and the growth of fintech.
Debrief the financial crisis. What was that?
Yeah,
There
I mean,
was
that
a
was
lot of greed.
yeah, it was a lot agreed,
Mhm.
and mortgages were out of control, and
Yeah,
that's
but it was greed taking advantage of people who didn't understand the product and then
right.
understanding how to flip it quickly over and over again. And
Mhm.
so, this is technology that's attempting in many cases. Yeah, I'm not saying that there's not bad actors out there giving products to
Mhm.
people at lower costs, at the same time keeping a lot of community banks, the Blue Ridges of the world, competitive enough to keep that one branch or two locations in a spot that if this branch left
Mhm.
would have zero banks in their towns.
Mhm.
And so not only is he, to me, I think he's trying to whack the fintechs in his comments more than the banks, but it would be considerably damaging to the inclusion aspect of financial services
Mhm.
to eliminate a lot of these potential partnerships because Chase will just gobble up these customers or Bank of America will gobble up these customers and these small community focused banks will just continue to disappear.
Yeah.
Yep.
All right.
Agreed.
Well, I
Mm.
mean that it's to be continued, obviously, because this was just really a speech that acting comptroller Sue was giving this week, and nothing has actually happened yet, apart from obviously the Blue Ridge action has happened, but there's everybody else. It's just a case of ramp up your compliance departments. If that's the message to fintech right now, because this is not a time for any unforced errors, because you will be punished. It looks like so.
And a lot of fintechs should. I mean, they learned that lesson, after Series A, Series B rounds. Maybe this gets them to learn
Mhm.
it a little bit earlier in their growth stage.
Yep. Yep. Okay, moving on. We're going to talk about UBS and Wealthfront. This came out late Friday, that UBS has abandoned their $1.4 billion acquisition
Mhm.
deal for Wealthfront. This was announced in January, pretty much at the height of the fintech valuation bubble. So, that could be one of the reasons. We actually don't know. The UBS, they say they want to. They're obviously Swiss-based bank, but they want to make more inroads here in the US, particularly to the
Mhm.
more sort of the less affluent of their typical customer base, and just didn't work out for them. They're investing $70 million, looks like, as a breakup fee into Wealthfront, but that's clearly they haven't been able to to basically come to terms.
I'm still
Yeah.
confused by this on the UBS side because if you read the article that we have, which I think is from Bloomberg, this is like the fourth or fifth failure of the new CEO to get
Mhm.
something kind of rolling in terms of a partnership and acquisition to bring the bank forward and cater to a customer that's not the uber wealthy
Right.
type
Right.
customer. And it just seems like an odd decision. I know the valuation stuff is probably an easy go-to to talk about in the press, but it just doesn't make much sense when you read the stated goals when they talked about the acquisition. I don't know how some of those are different now, other than maybe the valuations of fintechs.
Mhm.
Yeah. Yeah. Well, he certainly has a personal record of making some of these bigger deals, but I think that the last four it really fell through. Not just with UBS, with its prior companies as well.
Yep, ING.
But their whole strategy, UBS whole strategy, is going after Gen Zs and post millennials, using some of these tools like RoboAdvisor, Wealthfront. And this was his whole thing. When they hired him, it was, we hired you for that digital banking experience, and this is his first leg of that journey. So I'm actually not sure how long he's going to stay
Yeah,
there
and
now, but
I
this is
remember too
a tough
when
round phase.
UBS in the UK, we actually had them. We had they built their own digital wealth management platform called Smart Wealth. We actually
Mhm.
they at the launch we had the guy who was running it speak at our event in probably 2017, I think, but that only lasted about a year. and then they sold that off. Couldn't make it work apparently. So UBS, this is before Ralph Hamer's tenure, and so it they haven't got a great track record in digital wealth management. So we'll see if they can right the ship in other ways. But moving on, want to talk about Binance, onto crypto for a little bit here. Binance, this is a weird one. They have said that they are going to stop supporting 3 stable coins: USDC, which is the second largest stable coin in the world, USDP, which is PAX, and then TUSD. Really the big one is USDC, and they're going to say, right, if you hold those stable coins, you are going to be converted into the Binance stable coin, which is the third largest stable coin, BUSD. And they've given everybody 4 weeks notice to get this. If you want to get out, you can just get out. But Tether was not involved in this, which I thought was really interesting. So you got the number 2 and some other stable coins that are less valuable, but Tether was not. But anyway, curious decision by Binance, I think.
Makes sense to me. It's just a market share grab, right? I mean, they're not that far of a distant number 3 or number 2.
No, they're not.
Right. They're just right up against $50 billion worth of market cap, I suppose, for USDC. So they'll become number 1. But this auto conversion is a little bit disingenuous. And the CEO of Binance sort of throws some shades on the other cryptocurrency by saying that to solidify or to solidify the solvency of stable coin, we want you to convert. Basically saying that all the other guys, although they're calling themselves stable coins, not really solvent, which is kind of an interesting byline out of his speech. But they will be the number 1, I'm sure.
Yep, quite possibly.
But it's an interesting play.
Yeah, I mean, I think we're about to see probably a lot more take place in the stablecoin space than probably ever have to this point. To me, I think the most interesting part of all this, the stablecoin, and even some of the the comparison of which protocol does what and for whom and at what cost, is how the cross-chain potential cross-chain opportunities and what will exist, hopefully, eventually, because if the networks don't eventually connect to one another in some way, I think you're missing out on a huge opportunity, because then you're essentially having maybe a wallet will connect into different ones, but it limits the ability and the efficiency potential if you could figure out some of the cross-chain stuff with a lot of these different either stable coins or protocols, because then it opens up endless possibilities to be as transformative as we hope some of this technology will be.
Very true. And I think the stablecoin wars are about to heat up, it seems like to me. There'll be a lot more action.
And you'll have public versus private too.
Yep, exactly. Anyway, moving on, another crypto story. We've been following this one for a long time, or for several weeks now. This is the Tornado Cash story. It was an article, it was everywhere today. Coinbase is bankrolling a lawsuit against the U.S. Treasury over the crypto sanctions. They filed a court challenge in federal court in Texas, basically saying that the U.S. Treasury does not have the authority to sanction code. There was no person sanctioned. There was no company sanctioned. And obviously, this is the Tornado Cash is a decentralized platform, but they're basically saying, look, we're the Coinbase is the big gorilla here. We have the resources. We should be going to bat here. And because let's just say Tornado Cash is a mixing platform used by bad actors like the North Koreans, and also used by people who just want to get anonymity because it basically shields it basically makes it impossible to trace transactions. And so some people say, look, they're donating money to Ukraine. They don't want their wallet address known, so they go through Tornado Cash. So you've got bad uses for sure, and you've got good uses, but Cash has lots of crime involved in it as well, but we don't ban that. So anyway, thoughts?
Yeah, I'm not sure why Coinbase wants to die on that hill, right? It's not a winnable argument against U.S. Treasury, and they use their own employees as one of the plaintiffs, I guess, right, in the lawsuit or in the litigation, which is kind of interesting. I mean, the stat says that over 40% of Tornado Cash's overall volume was, these bad actors, right? The money launderers and also cyber criminals, right? Close to half it's not regulated in that sense. I don't know. I really, on one hand, we, this. I'm not sure if it's really Tornado Cash's authority to regulate this stuff. I don't think so. That's their whole business model, to create anonymity so you can mix up everything, all your holdings before it exits. But I don't know, man. I mean, you can make an argument that people with a hammer can kill people as well, right? But the hammers
Right.
are designed for something else altogether. I don't know. This is almost like the gun control conversation.
I think there's
Yeah.
there's kind of two aspects I see to the case or example here, which is there's probably always going to be some place for people to anonymously do something that's going to be out of the reach of sovereign governments and sovereign controls. And then there's going to be, if you want to come into the financial system as a whole and connect into banking and stuff like that, then you need to have these controls. But this side over here will always have this, and there'll always be a cap as to how big that will get. Maybe it'll grow more over time. There'll be a hardcore group of people that will live and die by it has to be anonymous, it has to be decentralized, it has to be. But the internet, there's plenty of things on the internet that are way outside the control of the government.
Right.
And as long as you know how to code, you can create your own Google, your own internet browser, and basically do whatever the hell you want on it.
Yeah, that's a really good point, Todd. And I think you've got the Tornado Caches of the world. You can't stop them because, as I said, Tornado Cash is offline. You cannot use it right now. But someone's gone and copied the code and uploaded it to another website. So the code is still out there and can easily be recreated. And it's not going to be possible to kind of to shut all this.
And
down.
people eventually will know. I go here. I don't have FDIC insurance. I don't have recourse. But I can move money anonymously, and I can do either good or bad things. If I want to hide my money from government and don't want to be targeted by them, great. I can do it here for a good cause or for a bad cause. If I want to, be in the traditional financial system, but connected in a more efficient way, I'll use Coinbase and others that help me do that, but use digital money or digital protocols or whatever.
And being very tax efficient, if you know what I mean.
Right.
If the Treasury, U.S. Treasury doesn't know you're moving money, there's no way to tax them.
Yep.
That might be the reason.
Yeah. Okay, so moving on, I thought this is really interesting. We're actually going back to traditional banking. Zelle has there was an article in Forbes about Zelle, which is owned by 7 of the largest banks in the country, and they are moving now more money than more than double what Venmo moves, and more than 20 times what Cash App moves. And so they've become, and it's interesting. I just went on. My bank is one of the 7 banks that is on Zelle, and you go on. I just went on the app and you see it there. Send money. It's really easy, and I personally don't use it as much as Venmo, but I feel like Zelle has, they've got the sort of the customer base because they've got so many. They've got tens and tens of millions of customers through all these large banks, and they're bringing more banks on board. So it's really, really interesting. That Zelle has gotten so much traction in just 4 years.
Yeah,
I this is probably the least surprising story that we have this week.
Right.
But I think there's an added question that should be asked in the research. Do you know you're sending money by Zelle?
Right.
Because if they ask
Mhm.
that to the same people that are sending money, the people with the knowledge that they're sending it through Venmo, I guarantee would be significantly higher than people knowing that they're sending using Zelle, because they guarantee most of them think they're just using their bank app
Right.
without
Mhm.
knowing that Zelle is powering it.
Yeah.
And so
Right.
the volume wise, I'm not surprised. But if you were to ask all those consumers, which way do you send money more, Zelle or Venmo? I think Venmo would crush Zelle from the standpoint of brand recognition.
Yeah. Quite
Mhm.
possibly.
Yeah. Yeah. This makes perfect sense to me. I mean, Zelle sits on top of early warning services, which is owned by the 7 largest banks, and they have associated banks in that network as well.
Mhm.
Yeah, I mean, bank created their own rail essentially decades ago. The early warning services has been around for at least 20 years, I think.
Yeah, I'm pretty
When I
sure.
worked at Chase, we did a lot of work with them.
Mhm.
So now they want to monetize it. In fact, in the charter of early warning services, it says, this is only created to defend fraud between banks, right? If I cash a check at JP Morgan Chase and cash it again at Wells Fargo, we're going to check against it with this database. It is not allowed to be anything else but that.
Hmm.
I think the new CEO at Early Warning Services sort of bend the arms of these banks for almost over like 5, 6, 7 years that says, hey, we have this powerful network. We got to make something out of it. I think
Yeah.
that's what's happening now. If you look
Yeah.
at their finances, I mean, they're charging 8, 9 cents per transaction to the banks. But that's just monopoly money, right? The bank actually owns the company. So where's the
Right.
8, 9 cents per transaction going to, really? And this has potential to uh, supersede Visa and MasterCards in some
Well, that's the
ways
thing.
if the
That's the
banks are all
interesting
united
thing.
together.
That's not really talked about
Hmm.
enough, because that was in the article in Forbes, was the fact that small businesses are starting to Zelle's starting to get popular with small businesses,
Hmm.
and they are now happy to do this because I think it was like
It's free.
0.45%, or actually, yeah, maybe it is free because I think they charge the
It's
banks
free. It's free now.
Yeah.
free for
Exactly. They charge the banks.
the small business. So,
Users. That's
do
right.
you want to get paid by
That's the
Visa?
big part.
Yeah.
Yep.
Do you want to get paid by Visa and pay 3%, or do you want to get paid by Zelle and pay 0? Man, that is a compelling
Hmm.
value proposition right there, and one that probably isn't being taken advantage of enough. I mean, I just loaded up my app on my phone here, and it just says send money. It's got the Zelle logo, and then it does say send money via
Powered
Zelle.
by
But
Zelle. Right.
so
Yeah, if you're in your bank app, you're gonna
yeah, it's all inside my bank app. I don't
It's already
leave
in
my
there.
bank app.
It's already in there.
it becomes kind of second nature to think it's US, JP Morgan, whatever bank that I'm sending it through. You're not looking at the Zelle logo. So
No.
it's it's to me, I think the winner is obviously small businesses. Awareness to them needs to jump up. But I think we're about to see a lot more competition in this space, and small businesses slowly, I think we talked about it 3 weeks ago with Ron Shevlin, Peter,
Mhm.
kind of slowly taking the market share from Visa and MasterCard and American Express to a smaller extent, and getting lower cost options through Zelle, Venmo, Apple, whoever.
Right.
And I
That's
think
right.
that's a good thing, because the duopoly is very costly for a lot of small businesses that need as much of a margin as they can get.
Yeah, I mean, have you guys seen Zelle when you're just out and about, going around small businesses? I have hardly ever seen
I
it.
see a lot of Zelle commercials. I don't see a lot of
Yeah,
Venmo commercials. Then
yeah,
again,
but I don't
Gen
see it
Z
at
doesn't
the point of
watch
sale.
TV
'Cause
either.
if I was a small business, I'd have Zelle right on my cash register and say, "Pay by Zelle."
I
Yep.
maybe once I've seen it.
Yeah, yeah,
Maybe
so,
once.
yeah. Anyway, we got to move on. So,
Yeah.
and talking again about retail payments, Apple Pay. This was a report that came out this week that Apple Pay is now processed more than $6 trillion annually, which is now more than MasterCard has processed. Keep in mind, there's plenty of MasterCard inside Apple Pay, but the total volume of Apple Pay, which is Visa, MasterCard, American Express, probably other credit cards as well. And that is now become the second largest payment processor after Visa. Visa does just over 10 trillion. Interesting, bigger than Alipay in China, which I thought was interesting. Like Apple Pay, it sort of took a while to get going, but I use it all the time now because everyone everywhere accepts, except Walmart don't. Everywhere accepts this tap to pay, and I don't have to carry any. I maximize miles, and I've got all my 10 credit cards loaded up in Apple Pay, and decide which one to go as I pay as I'm going, and it's just a much more convenient way than carrying a whole bunch of credit cards around.
Yeah, absolutely. I remember about a year and a half ago, it's all of a sudden I just switched over to Apple Pay. It's so much easier than just it just clicked over for me for some reason. There was no distinct reason for it. I just remember I started using this overnight. Load all my credit cards on the thing and just start tapping.
I think the big, or at least the huge change will happen when, I think, Peter, you mentioned Colorado's one of the small states, the few states that does this, which is your license goes on your phone.
Yep.
And so right now, most people still carry their license in a physical form, and along with that will come their wallet. And so I think people are starting to use both, kind of whatever's more convenient. They'll take out their phone, they'll pay for it. They're also used to doing that for like Starbucks and Dunkin' Donuts, and it's not a big step to then just use Apple Pay generally. There you go.
There you go.
But once that becomes widespread, then people are going to be like, all right, I don't need my wallet at all. Let me load up the cards. So I think it's on its way to getting there. I think we need a couple of non-financial steps to push the full market in that direction. But I mean, I think we're well on our way.
And it's so convenient. I mean, it's so convenient because not just is it a payment tool. I mean, I've got my health insurance card on here. I'm going to the Broncos game, not this weekend, but next weekend, the home opener for the Denver Broncos, and the tickets are in my Apple Wallet.
You got to pay that Russell Wilson salary now, Peter. And go Bills, by the way.
It's just, I see Todd has his Bills shirt on. The football season opens tonight. Big game, big game indeed. Anyway, we're going to end with a really interesting story, and this is it's a funky story, but it's one that
creepy one
kind of gives me the creeps a little bit. But this is where we've been talking about tap to pay, right? Well, there's a company called Walletmore which allows you to implant an NFC chip under your skin, and you then can just. You always have a payment. It comes with an app, and it's NFC, so it doesn't need a power source. It just connects with wirelessly, and so you just need your hand to pay. And that, I mean, Elon Musk talks about putting implants in your brain. This is a little bit less intrusive than that, but even then, it's just not that much of a problem to have your phone to tap to pay.
You still need your phone to make phone calls.
Yes.
Unless we're putting chips all up in our body. All right, let me get you this chip for my license and this chip to make a call. I think this is creepy. I don't think it's gonna attract anyone really. I think it's a novel idea, and I think it's kind of interesting to talk about. I don't think there's any real stuff here.
I looked into this. It still needs an app to work. You still have to set it up in an app. And I went to one of their official professional installation places, at least on internet. It's a tattoo and piercing place.
Really?
So I have to think twice about having something injecting in my skin, going to one of those places.
Well, those guys, it probably makes sense to get
or any professional body modifier. I don't know any professional body modifiers in my neighborhood, but that's what it says.
Yes,
and it says you can actually install it yourself. The kit is well put together enough you can actually just do yourself at home. I can't even. It just gives me the heebie-jeebies.
We're also talking about
yourself with it.
Yeah, they're also talking about making it smaller, and this is going to get all the conspiracy theorists really. Alive and well, saying you can inject it into your the future one is going to have it as an injection, a self-injection. So you put a little, because the chip will be so small it can fit through a needle. Yeah, but that's I'm not going there anytime soon. But yeah, there's a whole new generation of people coming up that are probably going to be a little bit more open to it than us.
Let's hope not.
Yeah, it'll be interesting to see. Anyway, we are out of time. Thank you very much, everybody, for watching or for listening. Thank you, Tim. Great to see you again. Thank you, Todd. Good luck to your bills tonight.
Thank you.
And
Good to
we
see
will
you,
be
Tim.
we'll be back same time next week. Have a great weekend, everybody. See ya.
Be
See ya.
safe. Bye-bye. See you.